example of deferred expenses. In a deferred expense, what we're doing is we're putting off the amount of the prepaid insurance into the time period that it belongs in. If we've used up $4,500 of this prepaid insurance, it's gone. We have to record it as expense. So my adjusting entry will debit my insurance expense. Notice I copied that debit into the journal. And my credit will be to prepaid insurance. This is my credit. I copied just the adjusting entry into my journal. Then I'm going to copy from the journal to the ledger, something we call posting, and we will update the ledger account balances to show the adjusted trial balance amount. So because our prepaid insurance had a balance before the adjustment of $6,000, if I reduce my prepaid insurance account, which is an asset account, by $4,500, the remaining balance is $1,500. That $1,500 is what would end up on my financial statement, the balance sheet, as the amount of prepaid insurance. My insurance expense would end up on my income statement as a debit amount, or not on the income statement, but it'll end up on your journal as a debit amount. But insurance expense will end up on your income statement in the expenses. And the total amount of the insurance expense at the end of this accounting period is $4,500. The next adjusting entry had to do with fees earned, which we know is revenue, but unbilled. If it hasn't been billed yet, we need to sit down and send some invoices to our customers because we've earned $10,200 and we have not received that amount yet. So at the end of the period, we've got to update our fees earned account as well as our accounts receivable for the amount of unbilled fees to our customers. So one of my accounts is going to be accounts receivable. The other account is going to be fees earned. This is an example of an adjusting entry that is accrued revenue. Accrued revenue means that it's revenue that we've earned. So we need to record it in this accounting period, but we just haven't received it yet. So it's accounts receivable in this accounting period too. So I have a debit to my asset account, accounts receivable, for $10,200. I have a credit to my fees earned for $10,200. The next adjusting entry is for the supplies. Remember, supplies is an example of a prepaid expense. We put the supplies in the supplies account when we buy the supplies. So the unadjusted trial balance says that we have $1,725. This is reflected in our ledger account. This $1,725 is no longer correct. We need to update this account because this is an example of a deferred expense. Our asset account supplies will go down by the amount that we have used. In this case, they did not tell us what we have used. You have to find what was used. What they did tell us was the balance of the supplies that was on hand at the end of July 31st. That balance was $615. So to find or to calculate the used amount of the supplies, we would take the beginning balance and subtract the ending balance from that. And that will leave us with the used portion of the supplies. The used portion of supplies means that supplies has to be decreased. We no longer have $1,110 worth of supplies in our supplies account. It's gone. Because it's gone, we've used it, it's become expense. So our supplies expense account is debited as the adjusting entry, and we have a credit to the supplies account. And this is a type of deferred expense. And the last one is unearned rent. And unearned rent should signal to you that we have set up an account and called it unearned rent because we have received some rent in advance from our tenants. The amount that we received in advance was the amount of the balance of the unearned rent account. We had received $3,600 rent in advance. So we have recorded this as unearned rent. Our unearned rent has a credit balance of $3,600 from the unadjusted trial balance. $3,600 we had received in advance before we had earned it. We had received rent in advance of $3,600 before it was earned. We now have earned $3,300 of that. How did I know that? The additional data told me that we have unearned rent at the end of the period of $300. So my unearned rent has $300 at the end of the period. It originally had $3,600 in there. The difference between these two is $3,300. We debit unearned rent because it is a liability account and it's being reduced. Remember, with deferrals, one account's got to go down. And if it's deferred revenue, it will always be our unearned rent that is decreasing. We're making it go down on the debit side. We're going to make our fees earned increased on the credit side. So my unearned fees is debited for $3,300 and my fees earned is credited for $3,300 in the journal. Remember, we copied from the journal to the ledger, which I don't have illustrated. That's what you would do in the real world. And then from the ledger to the adjusted trial balance. So the second part of this problem asks you to prepare an adjusted trial balance. An adjusted trial balance is an example of all of our ledger accounts and their balances at the end of the accounting period. In this case, the end of the accounting period was July 31st. So we will prepare an adjusted trial balance just to make sure that our total debits and credits have been added properly in our ledger. It doesn't mean we've done everything correctly in the journal, but it just means that what we have in the ledger balances out. We will start with our cash account. Remember, our unadjusted trial balance has cash in it at $10,200. We did not make any adjustment to cash, so we just bring that balance into the adjusted trial balance amount. In other words, we didn't have an adjusting entry that affected cash. So this $10,200 is just brought forward into the adjusted trial balance. Our accounts receivable, we had a beginning balance of this, but remember, we had accrued revenue that affected that accounts receivable. So when we look for our balance in the accounts receivable account, our new balance, our adjusted trial balance amount will be $44,950. That would be a debit balance that is brought down from our new balance in the ledger account. Since we didn't have ledgers, my T accounts will represent the ledger accounts. The ending balance is $44,950. That would be placed on the adjusted trial balance. Your supplies was also adjusted. It had a previous balance of $1,725, but because they told us that the supplies on hand was $615, our T account that we made for supplies has a balance of $615 that is brought forward to the adjusted trial balance. The next account is land. We never make an adjustment for land. We just bring the balance into the adjusted trial balance. So $50,000 goes on the debit side of the adjusted trial balance. The next account that we're looking at is the building account. The building account is not adjusted. However, we did depreciate the building, which means we adjusted this account. But the building account always is going to have its cost in there. So the cost of this building was $155,750. In our adjusted trial balance, the cost is still $155,750. The accumulated depreciation account, which would go next, this is the previous balance in accumulated depreciation for our building. Remember, we adjusted it, and it has a new balance of $69,250, which is taken into the adjusted trial balance. Notice it goes under the credit side because it is a contra asset account and should have a normal credit balance. Your equipment is brought down from your adjusted trial balance, and this is the cost of the equipment. We did not depreciate, we did depreciate it, but we did not do anything to the cost of the equipment account. That's why we brought it forward. We did, however, adjust the accumulated depreciation on the equipment account. The new balance in the adjusted trial balance is $20,450, which would be reflected on the credit side of the adjusted trial balance. Accounts payable was not adjusted. We didn't make any corrections or updates to accounts payable. You're just going to simply copy the balance that's still in there from your ledger into your adjusted trial balance. Now, all of these balances are coming from your ledger because you should have posted the adjusting entries to the ledger. All of the ledger account balances are updated. So all you're doing is you're copying from your ledger into the adjusted trial balance. And so you would continue to do the same thing that I've been doing. And then when we're through with our adjusted trial balance, we add up the column for the debit and the column for the credit, and they must equal here. So in this chapter, you have learned how to prepare adjusting entries. When we prepare adjusting entries, we put them in the journal. And then we copy from the journal to the ledger to update our ledger account balances. The ending balances in our ledger are copied to this adjusted trial balance. And the next step in the process we're really going to examine in chapter 4 is to prepare financial statements from this adjusted trial balance. We're going to do that in chapter 4. So in this chapter, it's very important for you to learn how to prepare adjusting entries. It's important that you learn how to prepare them before we move on to the next chapter. So I can't emphasize to you enough, you have to understand how to put the adjusting entries in the journal at the end of the time period so that we can update our ledger accounts and prepare our financial statements correctly. And that's all that I want to talk to you about in this chapter. Please review these adjusting entries. Know the terms of the adjusting entries. Know how to create these adjusting entries. And know the process of the steps of the accounting cycle. Remember from chapter 2, we journalized our day-to-day transactions, those transactions that happen each day of the accounting period. At the end of the period, we stop and we prepare adjusting entries. So when we do our steps of the accounting cycle, the first 3 steps came from chapter 2. Journalize original entries, post the original entries to the ledger, prepare an unadjusted trial balance. We did all that in chapter 2. We're adding to this in chapter 3 that you're going to have to journalize adjusting entries, post those to the ledger, and prepare an adjusted trial balance. Adjusted trial balance will be what we use in chapter 4 to start with. And in chapter 4, we'll continue the accounting process until we're through with it. And so it's very important that you know what's in chapter 3. So I'm going to stop here and we'll see you the next time. Bye-bye.